Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson. And today I wanted to discuss construction lending. Many lenders can do this, but not are all the same. A lot of people will start with us as a mortgage lender, such as myself, and then talk about building a home. And there's ways to do it that are easier than others. And this is what we're going to have our special guest today, in Sara Tiarht from Falcon Bank, who is a mortgage or construction loan specialist.
Yes, thank you for having me.
Yes, well, thank you for coming on. It's interesting because Jim Steele had given me your contact information for another client, building a unique property, very unique property, and we're still kind of working on some other aspects for it. But you already have everything ready to rock and roll, and the builder's already set, and so forth.
Yeah.
But yeah, let's talk about, a lot of times the people will come to me or be referred to me and like, hey, we want to buy a lot and we want to buy, build a house, and I go through all the things, right? And like, okay, it's, you know, first you got to get the lot, right? So do you have a lot in mind, and then do you have a builder in mind? Do you have specs and, the all the information for the build? What do you want to do? And a lot of times they're not nowhere near any of that, right?
None.
They just want to know, like, what do we need to do, right? And can we do it with 5% down and like all this stuff? And like, well,
Yeah.
that gets a little tricky. Um, but but yeah, the a lot of the people today too are getting into some unique homes, like barndominiums and houses. I don't really hear houses as much anymore. It's all
Yeah.
barndominiums, but
Doesn't sound as fancy.
yeah, right. You got to be
Or
exactly
sexy is a
right,
term that a lot of people have adopted these days.
right, exactly. But that's where, such as yourself, you can really come in, and Falcon Bank is a very good niche for this, right? And you guys can get this stuff done where most lenders can't, right?
Right. Yeah. We do specialize in construction financing and Falcon as a community lender. We've got 6 locations in smaller communities where that's what we pride ourselves on is helping our customers figure out a way to get the deal done. We're a preferred lender for SBA financing. Our commercial lenders are helping those small business owners accomplish their dreams. As a mortgage banker, I'm helping customers, with their homeownership dreams. And as you know, homeownership is the number one indicator to your personal wealth. So helping those customers achieve those goals is, why I do my job. And I really enjoy the referral relationship that I have with Jim Steele. He's been an outstanding referral partner, referred you, so I get to work with you. Other lenders at New American Funding, it's been great to work with and get to know many I've worked with for a lot of years and would almost consider even a friend.
Right.
You have those relationships that you build over time. Um, but Falcon can provide financing for the properties or potentially maybe the income scenario for customers that don't fit the mold for a secondary market loan that's going to go to Fannie or Freddie or wherever that goes. They meet with you. You're the frontline person. Clue me and tag me in, I guess, when,
Right.
I need to be on the ready. And construction financing is one of those deals that is super easy to partner with. A lot of
Yeah.
people like the idea of a one-time close, but it doesn't really work a lot of times. It may save some money or it might not. A
Right.
lot of times those fees are hidden in that all the fees are loaded up front.
Right.
And
Right.
and maybe the builder is in on it where they're paying the rate down or they're paying some of those fees, which guess what? Those got built into the cost of the home. So
Right.
sometimes those fees aren't always disclosed up front to the consumer. But us being professionals, sometimes we can, let them know that this may not look as good on paper, but is better in the long run for these other reasons.
Yeah.
And
It,
yeah.
and sometimes it's just the pure, stress of the whole, process, right?
Mhm.
So, what my experience is, working with builders and contractors, let's just face it, that, this isn't their forte. And if they're used to working with just construction lending, going to a Fannie Mae, you know,
Right.
where they have to provide all these additional things and all this other stuff, like it's a headache for them, right? And then it becomes, delays in like, hey, we can't close yet because the builder hasn't done this and they haven't
Mhm.
done this. So, it's having these conversations with people up front and understanding, if it's like, okay, who's the builder, right? And are
Mhm.
they set to go? Do they know this? Do they know that? And having that. And once I talked to the builder and I'm like, have you done these loans before? Right. And I just literally had that conversation,
Mhm.
an hour ago, with a builder and nope, we haven't. I'm like, okay, well, I'm going to send you a list and you're going to tell me like what the viability of you being able to complete all these tasks,
Right.
right? And I have a feeling that they're going to be like, "Oh my gosh, this is much different," right?
Yep.
And so forth. So then it's a conversation like, "Hey, is this something that can you take this on?" Number one, and because the ultimate goal is in the end is the buyer, the borrower, I should say, in our world, borrower.
Mhm.
They have to have they have to, we have to help them understand like the complexities and all of this, right? Because they don't know what it's like on our back end side. We try to shield them from that as much as possible and do a lot of the work for them, but they have zero idea like what kind of guidelines we have, right? Why do you
Mhm.
need this? And the
Yeah.
builders always say this, like,
Yeah.
why do you need this? So, being able to walk people through that and then understand that up front and then have those conversations and then say, hey, I think the better route to go is, I'm going to hand you over to Sarah. Or get all the information, send it all to you in the first place, and then get that like, hey, yeah, I can do this and
Yeah.
go from there.
The construction loan is contingent on perm loan pre-approval because we don't want to provide a loan if they can't get the permanent loan. So we work together on those
Right.
things. And
Right.
I can review the file that you've already started. So
Yep.
it's a good way to just figure out, have we dotted our I's and crossed our T's and know where we're at for debt to income ratio. Do they have the reserve requirements? We're going to need some post-close liquidity to verify that this customer can cover cost overages. Most projects go over budget, whether the consumer, picked out something that costs a little bit more, or, maybe there was some unknowable aspect and now the project costs more. And
Yep.
maybe the builder can cover it, or if they don't, we want to know that the consumer has cash to cover those overages. And they're not always thinking about those things.
Yep.
They're just pie in the sky. It's going to come in lower. The cost is going to be less in the end. Well, maybe it will, but we're going to, mitigate that and
Yeah,
be
we went to
upfront.
Viking appliances versus the Samsung appliances, right? And you got a
If
twenty
you see
thousand dollar
the
appliance
difference,
package.
if it's got red knobs, you're going to spend a lot more.
Right,
Yeah.
exactly. And I've seen it too. And on our side, in the build, when we're doing end loan financing, and all of a sudden we get like this last like 2 weeks before closing, hey, they just upgraded these packages, right? And then like, oh my gosh, like who's paying for it when? Oh, we already paid for it out of pocket. Like, okay, now we got to track all the money and like,
Mhm.
okay, this was paid for.
Yeah.
So, when I was young, newer to the business, and younger, of course, but when I was newer to the business, you just don't know what these pitfalls are going to be, right? And then all of
Mhm.
a sudden we get an updated, like so. It's all trying to be first, and even teaching my loan officers that I work with, like, hey, these are the things you got to make sure you're talking to with them up front, and
Mhm.
once so that we get into those situations, can it be done? Yes, but let's not have surprises and let's find out what's
Yeah.
going on. And
Generally speaking, I think I would live my life of seek forgiveness later instead of asking permission,
right,
except when it comes to construction loans.
right,
You don't want to start the project, don't do anything to the land until the loan is closed, and
right,
then really just ask upfront, if I do this, what would there be any adverse consequences?
right,
And I think that's a great scenario where you kind of mentioned in the beginning, with getting the builder involved and getting to know them, do they have a title company preference? Are they already used to a certain title company that they already know the draw process and they won't be surprised with some documentation that now needs to be submitted. So, we're kind of establishing this dream team so everybody knows each other and the right hand knows what the left hand's doing and everybody's got accurate expectations on how the draw process is going to go, how the closing is going to go. And we're going to use that title company to maybe buy the land Then they get their final plans and specs together. The cost is final. Now we're doing the construction loan. We're going to use that same title company, close the construction loan. They're doing all the draw dispersing. That title company can close the refinance. Everybody knows what's happening in the transaction. And I think that really transfers to the customers, satisfaction and their experience with the whole process, not feeling that it was horrible.
Right.
Not that it should be, it should be a smooth transaction.
It's, that's our main goal for everybody is make it as seamless as possible, right? So, the having what you just said was key is having those established relationships, or at least establishing them early on,
Mm,
right? Because if it's new lending,
yeah.
a new title company, new whoever, but getting that, so like obviously I collect all the information up front, and then I was like, hey, this isn't going to work on this end. But so I'm going to send it to you. We do that process, so they're not now applying on their own through you, right? Because
Mhm.
I'm sending everything
Yeah,
this way.
they might
So,
have started with you trying to buy an existing home.
right,
Now we're switching gears. I found this plot of land and it's in the area that I want to be in, and I'm going to build in 5 years. Well,
right,
probably you'll build in a year, but that's okay. If
right,
you think it's five, we'll go with that.
right, exactly.
But yeah, then I do the land deal and I've already, marked down on this file that you're the referring lender. So as soon as they start talking about any future financing, or even if they come back and want to do something that I know you can provide that financing, I'm
Right,
sending them right back your way because we
right.
definitely protect that referral relationship.
Let's talk about, so here, what's the number one question that everybody gets is like, how much money do I have to put down on land?
There you got it. Yeah.
Right?
How much do I have to put down? Which is a bit unknowable.
Right.
We don't know. We could start with a scenario with what is cost.
Right.
Well, we have to cover cost. So if you already own the land and you've got some equity in the project and cost only needs to cover the build cost, the loan amount probably is going to cover all of that. So now you don't need any cash in,
Right.
you
Right.
know?
Yeah.
But if you're buying the land and you're building with a builder, cost is going to be, the cost of the build plus the cost of the land.
Right.
And we can lend up to 90% loan to value. So now we're factoring 10%
10%.
plus your closing
Yeah.
costs. And then keeping in mind, you want a little reserves for those overages that you aren't
So
thinking.
here's the questions I get from my loan officers, from clients all the time. Like, hey, I want to buy this piece of land. And there's variables, right? So let's just talk about that. I want to buy this. There's 100 acres up north that I want to buy, and it's hunting land.
Yeah.
You know, it's raw hunting land. That's it.
Mhm.
There's just a fire code, and that's it,
Yep.
right? What what is the minimum
Mhm.
requirement for you guys on that?
So we can finance that at
Mhm.
35% down.
Yep.
We can amortize the payments up to 20 years. We would have an in-house rate for that. Today that rate is 875.
All right.
So you'll make an amortizing payment on a 63-month balloon. If
Okay.
there are some improvements to the land,
Yep.
maybe it already has electric, it's got an outbuilding, or whatnot. If it's improved land, now we can do 75% loan to value. So we need 25% down.
Yep.
Now,
So is that different than a lot?
so city lot, you're
Yeah.
gonna build on that.
Yeah.
But again, probably not within a year. It's five
Right.
years out. We look for 35% down.
Okay.
But if you're buying this land and you're really going for it, where you think you're gonna build in a year, we look for 25% down.
Okay.
So some of the parameters for the down payment are based on the collateral and then kind of purpose driven as well.
Awesome.
Hmm.
And now, you know what, what I always tell people, like, hey, this 35% down on this land is also the equity on
Yeah.
helping build that house. So
Mhm.
you don't have to come up that all the extra money. Now it depends on what the size of the house you're going to build, right?
Yeah.
But
Because we lend on the improved value for the construction loan.
right,
So if you've got that 35% in or 25% in and when you bought the land and maybe you've paid it down a smidge
right, right,
since you
right,
originated
right,
that land loan, um, now that payoff is the cost of the land plus the cost of the build,
right.
again, lending on the improved value. So you are going to have some equity,
Mm-hmm.
but if you've done some high energy efficient aspects of your build, ICF forms, geothermal, that might not necessarily be represented in the appraised value, but certainly would be an additional cost. So We're going to come up with a loan scenario, hypothesize your down payment. We're going to get the appraisal ordered based on your plans and specs, and then we can determine your loan to value,
Can
assuming that your debt to income supports that loan amount.
can we run a quick scenario, just like let's just like an easy scenario.
Mhm.
Like let's just say a piece of land, let's say it's 20 acres in Premier Place, right? That somebody wants to build and it's $100,000.
Oh,
Right.
deal. Where are we buying that?
Right? That's yeah,
Who's the
exactly.
realtor? I need my purchase
Well,
agreement.
okay,
Just kidding.
let's back it up. Let's say 10 acres, but
Okay.
let's just start with the numbers of $100,000 for the
Yeah.
lot, right? And let's just say they're going to build within a year, so they
Mhm.
put $25,000 down, right?
Mhm.
Plus closing costs, et cetera. But they have 25% equity in that.
Yep.
The build's going to be $500,000.
Okay.
So now you have a $600,000 loan, but you have 25 grand already in, so could you go to the build would be 10% down total on that? Would that
Yeah.
be something
So
like?
if the future value is 600
Hmm.
and the build cost is 500
Hmm.
and they owe approximately 75 on the land,
Right,
the cost side of the equation is 575.
right,
And 90% loan to value of 600 would put a loan amount at 540. So now you need 35,000 down plus your closing costs.
right.
I think if I did all that math
Yeah,
in my head
yeah. I was
correctly,
double checking the math in my brain. So,
I did not
no,
make
I
it.
think that's a great scenario to do because so many people just can't understand that, right? Um, and I've been fortunate. A lot of the ones I've done in the past with the end loan financing is like mom and dad gifted, this is like
Mhm.
rural. Mom and
Sure.
dad gifted us 6 acres and we're going to build on this. And so the 6 acres are $3,000 an acre. It's 18 grand,
Hmm.
and we're building a $300,000 house,
Yeah.
right? So we got that portion in and now it's just not
Hmm.
having to come up that because that equity is already
There
built
are
in.
some construction lenders that will only finance the lesser of when it comes, kind of like in a purchase, it's the
Right,
lesser of the purchase price or the appraised value. So those construction lenders are only financing their loan to value on the cost. So in that situation, you are going to automatically need more cash into the transaction.
right,
So it is really nice because there are situations where we can use this construction loan to purchase a property. Maybe it's an existing home, but the customers are doing a renovation.
right,
We're lending on that improved value. So if they're buying the house and they're doing X, Y, and Z to it, and now that 90% loan to value means they don't need a down payment, they're just going to
right,
pay closing costs. I mean,
right.
that sounds pretty great.
Yeah,
Or even if your customers own the home.
right,
We talked about how people are, or we haven't talked about it, but it's been out there.
right, right,
People are married to their rate.
right,
We
right,
would have to be in first lien position. We
right,
would refinance that loan. But,
right,
if it makes sense and they want to stay, but they really want, these other aspects to the house, we're going to pay off that existing mortgage, but we're lending on that improved value. So
right,
maybe they don't need any cash out of pocket to do those major improvements. Or maybe they're going to do a little bit, a little cash in and still get what they want done all at one time.
right.
We do the construction loan, you do the refinance loan. It's a perfect marriage.
Yep, it works out very well. And then again, reiterating, having those partners to walk the people through that, to have the easiness as much as it is. I mean, because it's buying a home is stressful. Building a home is even more stressful. And I did a loan for my cousin and he was the GC on it.
Mm.
Right.
Yeah.
So, and he said, I said, now that it's done, he's like, I'd never do this again. He's-
It's amazing how many people feel that those dollars are well saved to not pay a general contractor. And some, they work in the trades and it's fine for them. And at Falcon, we do allow the borrower to act as their own general contractor. They are going to pay a smidge higher interest rate,
right,
probably, I don't know, 3/4 point higher, but they get to run the show. They're processing the draws, everything's on them. They are in charge of cost. So if they whoopsie forgot that the concrete person is not doing the excavating and you didn't realize your bid is now short 18 grand,
right,
that's on you.
right,
Again, that's why we're mitigating, those cost overages and making sure we haven't set you up for failure. Because if you own the land and maybe your 90% loan to value that you're pre-approved for, that you in no way intend on financing in the end, it's those funds are there. you can use them to draw against, we can build in those contingency funds to the loan amount. So we're going to, probably not require it per se, but encourage a customer to have those contingency funds for those unknowable factors.
Yeah. And that's, my conversations, because it's a lot of times I get first time home buyers like, hey, we want to build a house. Okay, do you know what that all entails? Like
Yeah.
where are we at?
They
And
might
some
need a builder to carry the financing and come in with a purchase order, but
right, right. And then there's some
never know.
builders that are custom builders that, so you got the big builders that they
Hmm.
do all of that, right? And then they have their own financing
Yeah,
and and I struggle with it so much because
agreed.
they're like, well, if you use our lender, it's $10,000 off your closing costs, right? And it's like,
That we
okay, well,
built into the purchase price.
exactly. That you hit that nail on the head. It's always built in.
Pay no attention to the man behind the curtain.
Right. I had a client, and they were looking at one of the big name builders, not going to name them,
Sure.
and they had like $20,000 in incentives, right? To use their financing, right? And but they don't weren't qualified for like, or the borrowers qualified for first generation home buyer,
Oh.
but builder is not going to give them that,
Mm.
right? So I said, well, ask the builder what the price is going to be if you paid cash for it, right? Like, what's the price going to be with cash? Like, hey, I'm coming to the table with cash. What's it going to be?
Yeah,
So we got that number. Then
interesting.
we were able to, like, hey, I'm going to go, like, I was able to show them the difference by, yes, you're getting 20 grand over here, but with their financing, they don't offer that you can't get the 32 grand first
Mhm.
generation. Um, so you're net
Yeah,
12, but their price is now, if you were paying cash, is X. So we got them to be able to do it that way.
yeah,
So I mean that was a unique situation because it was first generation. I was lucky on that aspect.
yeah.
But I've taught more and I've done some coaching and I've had people like when you go to a builder, just ask them what the first price is cash. So you
Mhm.
get that out of them right away.
Yeah,
So
yeah.
if you can get that, because it's built into the price. Literally, it's
Yeah,
built in the price of the home.
nobody works for free.
Yep. And I've had over my career, I've had a number of people like, I want to work with you because I trust you. And
Mhm.
like maybe they got a bad vibe at the lender that the builder had or whatever reason, but they give up
Yeah.
$6,000, $7,000 in incentives. 10 is really hard to overcome, um, but regardless, getting back on track of like you do have some custom builders that will like they'll go out, in this market and like, okay, they'll look at the lot. Well, I know if I for some reason end up having this house, I know I can sell it,
Mm.
right? So they'll do the financing. We come in and do, but it's very rare that that happens. So they do need either me or you to carry that front end and then come in on the back side of it, from the end loan financing. But yeah, just breaking it down to clients like, okay, well, there's a lot. We gotta, if we're gonna do this in the succession of buying a lot, closing on the lot,
Mhm.
finding the builder, getting plans and specs, getting everything, and closing on a construction loan. That's
Mhm.
number two. And then you have the end loan financing, right?
Yeah.
So having all three of those, and then it's easier if you have the lot and the construction loan.
It is. I mean, if that land seller is willing to wait to close
Yep.
until you can get your plans and specs together. So if you've already corresponded with a builder and you have some plans in mind or kind of know maybe they have a certain model that you're interested in, close on or before on that land purchase to allow time for those plans and specs to be final so the appraisal can be ordered. That would be nice. And I do like that because then the appraiser is giving the opinion of that site value here and now
Right.
based on that purchase price. It's rare, but you could see down the road where the appraiser, who's probably different than the appraiser that was used at the land purchase, I mean,
Right.
almost certain that it would be a different person, their opinion of the site value could be a little less. And now maybe you lost a little equity, which is, not ideal.
Right.
Um, doesn't happen very often, but can happen. So it is nice to acquire the land with the construction loan when possible.
Yeah, that's what I always point out. Like, hey, are you guys ready to go? Do you have a builder? Like, do you
Hmm.
have this? Because that just taking one closing out helps closing cost
Yeah.
wise.
And if you're
So,
buying 10 acres, you don't need to worry about 8-foot or 10-foot setbacks or those types
Right.
of things. You're going to be able to build the house most likely that you want, within the confines of that
Yeah.
10 acres.
That just brings up another thing, like setbacks, right?
Mhm.
People just don't, if this is your first time doing it too, like, oh, I'm buying a lot and oh, what's the setback? And
Or if you
um,
buy a house in Edina and you want to tear it down and build your McMansion,
right.
you know,
Yeah.
your price per square foot is now $700. No, I don't
Right. Exactly.
know.
Well, it's gotta be, right? Um, all right, Sarah, this has been some fantastic information. Um, what's your what's your experience? What was your journey into, being a mortgage lender, construction specialist? You'd mentioned to me that you can do car loans, right? You can
Yeah.
do home equity lines of credit
Yeah,
and
I
so
am a
forth.
consumer lender at Falcon, so I can do, you know, basically any installment loan, whether it's be it title secured or savings secured. We do have deposit accounts at
Right,
Falcon,
right.
checking, savings,
Okay.
all that good stuff. We've even got a new program where you can earn 6% interest on your checking account, and then you
Six.
tie that with the savings, and where you can earn 4%. I mean, I've never had so much interest income in my checking account.
Right?
It's been awesome. Of course,
Yeah,
there's some minimum requirements with debit card
sure.
transactions or direct deposit, all that good stuff. But yeah, so as a lender, I'm doing the car loans, camper, boat, those types of things, home equity lines of credit, any primary residence or second home. So if that real estate is going to be owner occupied, that's me. Anything non-owner occupied, our business bankers are our commercial lenders. So they are not going to use the improved value on, say, if they're doing construction financing or improvement loan, they would lend, they base their loan to value off a cost on that non-owner occupied. But
Right.
anything that needs to be financed, Falcon probably can find a way to do it.
Sure. That's
Yeah.
that's awesome. Well, I got to talk to you about my company. I got to get
Yeah.
that financed.
Refer you to one of our
All
business
right.
bankers.
There we go. Anyway, no, this has been a pleasure having you on. I think it really, I mean, it always reinforces what I already know, but it helps me even understand it even better. But hopefully, our followers and other people can get great information out of this because it's when you're building a home. Oh, we didn't even get into to the to like the other types of homes that are like coming up now, like the tiny
Yes.
homes and
Yep.
stuff like that.
Yeah. You
And that's what makes you guys so special too, is because you're not following all these rigid guidelines. And like, Fannie Mae is like, okay, tiny homes, like they're trying to make, how is that going to work? But
Mhm.
on the build, and even if that's the other thing is like, let's say you got just a true unique property and it's just not going to meet
Mhm.
the in the box for Fannie, Freddie,
Yep.
FHA, whatnot, right?
Yeah.
So you guys can not only just do the construction loan, but then you can also do,
Yep.
you could wrap the loan up into an end loan
Yeah,
yourself.
that refinance instead of being with you, if this property is not going to fit the mold for Fannie, Freddie, if you can't do the perm loan, then I could keep it in the beginning, knowing that, Falcon would do the refinance
Right,
and we would cap it at 80% loan to value
right,
then.
right.
There may be other loan to value requirements, I guess, depending on the collateral type.
Sure.
Um, but
Well, yeah,
definitely we explore all those options, and it's not going to take 6 weeks to decide those things. It's going to be talked about in the beginning.
right,
Um,
right, right.
we're definitely going to be upfront with the information. And if we can't do it, this is why we can't do it. If we can do it, these are the terms for which we can do it.
Awesome.
Yeah.
Awesome. Well, Sarah, thank you so much for coming on the show.
Hmm.
Yes, I
Long
love
time
doing this.
listener, first time participant. So.
Well, I always like to invite guests back when we have new topics to discuss. And you're can I say, Jill of all trades when it comes to lending because of what you can do and
Mhm.
and so forth. But yeah, it's been great having you on.
Thank you.
And everybody, if you have any of those needs, obviously talk to me first so
Yeah.
I can refer over. But anyway, um, please reach out to either Sarah or I. We'll have her information in the comments below. But like and subscribe. And again, thank you, Sarah,
You're
for coming
welcome.
on.
Thank you for having me.
Yes.